Imagine you invested $180 billion in a company, but the chief executive told you upfront, "We're building 3 world-changing things that are probably impossible, and if we pull off just 2 of them, you'll get your money's worth." That's SpaceX's entire valuation model in one sentence. Steve Westley, a venture capitalist who sat on Tesla's board during its Moonshot phase, just analyzed SpaceX's price tag and made a startling claim. The company doesn't actually need to succeed at everything. It only needs to nail 2 of 3 audacious goals. That's not pessimism, that's clarity. Those 3 moonshots aren't casual product launches. They are bets on whether rockets can become fully reusable machines that fly like airplanes. They are bets on whether internet beamed from space can actually compete with traditional telecom networks. And they are bets on whether humanity reaches Mars as a genuine multiplanetary species. Westley's insight flips the entire script from all or nothing thinking into realistic probability math. Wall Street is explicitly pricing in that one of these will probably not work out as planned. So here's what matters: which 2 are most likely to actually happen, and what happens to SpaceX's valuation if only one succeeds. That's where the real story starts. Before diving into the moonshot math, you need to understand why Steve Westley's opinion actually carries weight. He's not some random commentator posting on the internet. Westley is a battle-tested venture capitalist who's seen billion-dollar bets from the inside. He co-founded eBay, served as chief financial officer, then moved into venture capital where he backed Airbnb and even SpaceX itself. More crucially, he sat on Tesla's board of directors during its most critical phase, when Elon Musk was making equally audacious bets about whether electric vehicles could disrupt the entire automotive industry. Westley watched one impossible company defy every skeptic and become worth trillions. That's the unique perspective he brings to SpaceX analysis. When Westley says hitting 2 of 3 moonshots is realistic, while hitting all 3 is optimistic, he's not being negative. He's being precise based on historical patterns. He's drawn a direct analogy between Tesla's path and SpaceX's current trajectory. Tesla didn't need to revolutionize mining, energy storage, and autonomous driving all at once. It needed one core insight to work: electric vehicles could be genuinely desirable, profitable, and scaled profitably. Everything else flowed from that single success. For SpaceX, the logic is identical. The company doesn't need a perfect future. It just needs the right 2 pieces. So what exactly are SpaceX's 3 moonshots, and why does each matter so much for the company's future? First, Starship full reusability. Right now, most rockets are built once, then either crash into the ocean or burn up on re-entry. Think of them as airplanes you demolish after a single flight. Starship flips that entire model. The goal is landing the massive first-stage booster like an aircraft after launch, refueling it within hours, and launching again. Success means reducing launch costs from thousands of dollars per kilogram to maybe 100. That's a 10-fold reduction. That changes everything about what becomes economically possible in space exploration and commerce. Second, Starlink profitability. Starlink already has thousands of satellites providing internet to remote areas, ships, and soon aircraft. The moonshot here isn't launching satellites. It's building a business where monthly subscription revenue actually exceeds costs. Starlink currently burns cash. It must prove that global internet from space works financially, not just technically. Third, Mars and deep space. This is the long-term vision. Can humanity actually establish a self-sustaining civilization on Mars? It's the reason SpaceX exists. All 3 matter differently. Starship is a technical engineering problem. Starlink is an economic problem. Mars is a generational vision. Westley's insight suggests nailing 2 of 3 is the realistic bar. Let's make this concrete by walking through realistic scenarios. Scenario 1, Starship reaches full reusability, Starlink becomes profitable, but Mars colonization stays decades away. SpaceX becomes the world's dominant commercial launch provider. Every satellite company, every government, every startup uses SpaceX because costs are genuinely lowest. Starlink generates billions in annual subscription revenue. This scenario alone justifies the current valuation. SpaceX doesn't need Mars to be worth what Wall Street is paying today. Scenario 2, Starship succeeds, Mars becomes a serious engineering program, but Starlink never reaches global profitability. Maybe Starlink stays useful but niche. SpaceX still controls space access for humanity, and that alone is worth enormous value. Plus Mars becomes humanity's greatest achievement. The valuation holds. Scenario 3, Starlink becomes the dominant global internet provider, Mars becomes our multiplanetary backup, but Starship reusability takes longer. Launch costs don't drop as fast as hoped. SpaceX becomes a telecom giant with a long-term deep space vision. The valuation still works. But scenario 4, where only one succeeds or all fail, that's where the current price tag collapses entirely. Maybe it's worth $50 billion instead of $180 billion. That's a 70% haircut. That's where Wesley's analysis becomes the warning. The current valuation only survives if at least 2 of 3 succeed. SpaceX isn't the only company betting its valuation on moonshots, but how does it actually compare? Take Alphabet. It makes almost all its money from search and advertising, but it invests in moonshots through X development, self-driving cars, drone delivery, neural interfaces. Alphabet can afford to fail at those because search is massively profitable. Self-driving cars never working out doesn't kill the company. SpaceX is the opposite. SpaceX's entire valuation is the moonshots. It's not like Apple with a mature, massively profitable iPhone business funding experimental ventures. SpaceX has never posted a full-year profit. Every dollar goes into Starship, Starlink, or next-generation capabilities. That's actually riskier than Google's approach, but it's why the potential upside is enormous. Now compare SpaceX to early Tesla. Tesla in 2012 was valued at $2 billion, and investors were betting almost entirely on whether electric vehicles worked at scale. Elon's company was building a product, the Roadster, that almost nobody believed would be desirable, but Tesla nailed it. It created a lifestyle brand. Starlink faces similar skepticism. Why switch from terrestrial to satellite internet? But Starship's challenge is different. It's a pure engineering problem. Either rockets become reusable or they don't. Less market uncertainty. More physics certainty. That's arguably why Wesley thinks 2 of 3 is the realistic bar. Here's where Wesley's analysis hits hardest for investors. SpaceX was last valued at $180 billion in private markets, making it worth more than the entire aerospace industry was worth 50 years ago. That's not hyperbole. One company in private funding has more paper value than entire sectors had in the era when space was purely government affairs. But that valuation is built entirely on moonshots, not on current cash flow, not on current revenue. It's a bet on the future. If SpaceX nails 2 of 3 moonshots, the valuation probably holds or grows significantly. Starship alone becoming routine and cheap could be worth $500 billion to the global economy over a decade. Starlink dominating satellite internet could be worth hundreds of billions. Mars becomes humanity's greatest achievement, potentially opening an entire new frontier. But if SpaceX only accomplishes 1 moonshot, the valuation collapses. Maybe it's worth $50 billion instead of $180 billion. That's a 70% haircut. For early investors, that's devastating. For employees holding equity, that's life-changing money evaporating. That's Wesley's real message. He's not saying SpaceX will fail. He's saying the current price tag only makes sense if you believe the odds that at least 2 of 3 succeed are better than even money. Is that realistic? That's the investor conversation. So how do you actually evaluate whether a company's moonshot bets justify its valuation? Here's a framework that works across companies. First, identify the core moonshots explicitly. SpaceX makes this easy because Elon talks about them constantly. For other companies, read shareholder letters and earnings calls. What fundamental assumptions about the future are baked into the current stock price? Second, rate each moonshot independently. Ask yourself for each. Is this technically possible? Is it economically viable? Does the team have the capability? SpaceX scores well on technical feasibility and team capability. Starship's physics is sound. The team has proven rockets work repeatedly. Starlink is already technically operational. The question is profitability. Mars is further out. The timeline is fuzzier. Third, create realistic scenarios. Don't assume all or nothing thinking. What if 2 work and 1 doesn't? What's the company worth then? Fourth, compare to actual history. Tesla succeeded at making desirable electric vehicles. That was the core moonshot. Now autonomy is a second moonshot. Investors need to evaluate whether the valuation assumes autonomy succeeds or just current EV business works. Same logic applies to SpaceX. Fifth, understand the time horizon. Wesley's analysis assumes SpaceX can execute over the next decade. If your timeline differs, your valuation changes completely. Remember, moonshots are high risk, high reward. That's not a flaw. It's the whole point. Here's the takeaway. SpaceX doesn't need to achieve the impossible. It only needs 2 of 3 moonshots: Starship reusability, Starlink profitability, or Mars colonization. That might sound relieving, but nailing any one would be historic. Nailing 2 is genuinely difficult. Wesley reframes this from binary success or failure thinking into probabilistic bet-making, which is actually how venture capital and genuine innovation work. Watch Starship's next orbital tests closely. Every successful booster landing brings routine reusability closer. Watch Starlink's quarterly subscriber growth and their path to profitability. The company has guided toward profitability before, so upcoming earnings calls show whether they are on track. Watch Mars mission timelines. SpaceX has stated ambitions to land cargo on Mars within 5 to 7 years. Each Starship test brings that closer to reality. Watch SpaceX's private valuation at the next funding round. If Wesley is right, future investors will be pricing in which 2 moonshots they actually believe in. The smart money's bet tells you what the market really thinks about SpaceX's odds. The space industry is about to become massively more interesting because the stakes are finally clear. SpaceX's moonshots aren't nice to have, they are the entire valuation. And that clarity changes everything. Follow for daily updates on AI innovation and the technologies reshaping our world.